And tonight I'm here to spend just a few minutes doing a quick intro for Ophir and some of the things that he's going to be talking about tonight. If you have heard Ophir speak in the past and you're already familiar with his software, you're in for a treat because you get to always see the stuff that's new and updated and probably learn some new ways on how to use it. All right, this guy is just kind of a master at coming in and really dialing down on specific stats that make the most sense leading up to earnings and right after earnings and things like that too. But the other great thing about this too is that if you've never heard of Ophir before, heard of his software, then you're in for a real treat because he is going to come in and show you some stuff in terms of specific statistics on options that you've most likely never seen before. For example, if a stock is running into earnings and is 7 days out, okay, is it better to buy a Delta 40 call option, okay, or is it better to buy an at-the-money straddle, okay, or is it better to buy a Delta 30 call? Well, with the software that he uses, you can actually go back on a specific stock and see exactly which one would be best. And so, for example, on Microsoft, a Delta 40 call might be best 7 days before earnings, but on NVIDIA, a Delta 20 call might be best 14 days before earnings, and it might be best to, sell it 2 days before earnings are out versus 1 day. And so the great thing with this is that Ophir gets really, really into the data on this, and it is extremely helpful in terms of seeing what exactly has worked best in the past. And it's not a blanket statement. It's not like, oh, yes, 7 days before earnings you buy a call, because it's actually stock specific. Okay? Each stock behaves a specific way before earnings and then also after earnings. So anyway, it's stuff like this it's just really cool to kind of see. He's also got some new stuff that he's going to be talking about, and then also just some general strategies. And so Ophir, so first of all, thank you again for joining us tonight. I always look forward to your presentations as they are a wealth of knowledge, and always looking forward to it. And I unfortunately am doing this mobily at the moment, and so I have got to get back into my car and start driving home. And so I will miss a portion of this presentation and have to watch the recording on it. But I wanted to make sure that you kind of got introed, and I'm sending you off here. And as always, just your stuff's great, and thank you for being here tonight. And so with that, I would like to turn this over to Ophir. You guys are going to be in great hands, and Ophir, all yours.
All right. Thanks so much, John. I'm going to do the same thing that Darrell did, which is I'm going to do a mic check. So let's start simple. Can everyone hear me? Audio good. Thank you very much. Awesome. All right. Now, I'm going to ask you another question. Thank you so much. And this is totally up to you, right? You drive this webinar. I know what I'm going to present. What I'm going to present to you guys is just going to be answers. I cut through all the noise, and I'm just going to give you empirical, objective, explicit answers. Before I do that, though, I ask everyone on a webinar if they want to know about my background. And it's perfectly reasonable to say no. You can say no. Oh, feel free to share my screen, right? Of course, let me do that. Sorry. Hold on one second. High res. All right. Hold on. I'm trying to share my screen, sorry. Yeah, I'm here, guys. Sorry, I haven't gone anywhere. I'm trying. There we go. I've got it. Yay. It was a little bit slow. Let's share that. Okay, so I have gotten mixed messages about whether to give an intro. So I will just give 2 sentences, and that should make everyone happy. My name is Ophir Gottlieb. I'm the CEO of Capital Market Laboratories. We are a member of Thomson First Call. So that means our research sits side by side with Goldman Sachs, JP Morgan, Morgan Stanley, et cetera, on Reuters terminals. And our goal is very simple. It's to empower every trader to have the same tools and information available to them, to you, as the top 0.1%, right? People on the terminals are the top 0.1%. Nobody gets access to the terminal. We take our tools and give them to everyone, all right? I was a former option market maker. So at least you know that this guy, this voice has done something with options. And if you're interested anymore in my background, there's an article on the Huffington Post dedicated to me called Financial Services, the Third Wave of Innovation, AI and Machine Learning. And you can look that up, and then I can skip the whole intro. You can also see my peer-reviewed paper on neural networks and how it applies to large-scale finance as well. And that's it. Just Google me. So I'm going to skip the intro part. But now I'm delayed transmission. Okay. Now I'm going to get into the presentation. And this is kind of how I always start it, just so we know what is it, tell them what you're going to see, or tell them what you're going to show it, and then tell them what you showed them. So when it comes down to it as traders, and you've probably all heard this so many times, you want to have a plan in place, right? Okay. Trade your plan your trade, both things, one thing, all true. Sometimes that plan has to move quickly, right? So those of you who are tick by tick, minute by minute traders, you're going to look like intraday charts, day trading. Sometimes you want to move not quite that fast. So maybe it's a 1-day trade, a 2-day trade, a 3-day trade, a 1-week trade, a 2-week trade. That's what I'm going to be showing you. So I'm not going to be showing you anything about tick by tick data. Okay, this is not high frequency trading. All right. And I'm going to start with a pre-recorded video for a few minutes, and then I'll come back live and show you for the first time our newest empirical research. And it brings explicit and objective facts surrounding stock behavior in the week before earnings, when the prior earnings, that is the earnings 3 months ago, yielded a big move. Okay, so it's a reasonable hypothesis to wonder if that impacts momentum in any way going to the next earnings. The answer could have been no. Right? We don't know. We do know, I shouldn't say that. We test it empirically, but I'm going to share that newest research. That research has not been shared outside of the trade machine community. So this is the first time I'm presenting to a community where obviously not everyone is a member, and we're going to be sharing our research, and we really won't do that for anyone else. So I am going to start with a video. What I'm going to show you in the video, just to be really explicit, okay, are the three different types of trades: momentum trades. And momentum trades don't mean necessarily mean in companies like NVIDIA and Microsoft. A momentum trade can just mean, is there a period of time when like Ford stock or Goldman Sachs stock tends to move in a certain direction several days in a row, and that allows you to take a position and profit with tight risk controls, right? So we'll talk about momentum trades. And everything I show you is going to be empirical and explicit, right? This is not like I know a guy, or I saw a trade, or this one time I did this thing, or I made this much money. This is empirically objective fact. Okay. Then we're going to talk a little bit about technical trading, just 2 triggers, just 2, for those of you that like that. And again, this is empirically tested, not like, hey, I know a guy who uses moving averages and sometimes it does this thing. Not at all. This is all empirically tested, and it's completely objective, which is to say, if we looked at a technical indicator and it didn't work, fine with us. Why would we trade it if it didn't work? For those of you that work with John, you'll be happy to know that the TTM squeeze does work. And then we're going to look at non-directional option trading. Okay, so these are trades where either you're owning options, and it doesn't matter if stock goes up or down, you just want it to move, or when you're selling options and you don't want the stock to move a lot, but they take no directional risk. And again, the results we talk about here are empirical and explicit. So it's not like, hey, I have an idea, why don't you try it out? It's more like, here's 25,000 trades in the history. Here are 10,000 during the bear market, 15,000 during the bull market, and here's how they've done. Things like that. Okay, so I'm going to push play on a video, which sounds like a simple enough thing, but I'm going to push play. I'm going to put my microphone up to the speaker, and I'm going to let it run for like 10 seconds. And then I'm going to stop, and I'm going to come back and say, does that sound like something you guys can hear? I don't want to play a silent movie or a warbly sounding movie. So I'm going to push play. I'll be right back. I'm not going anywhere. Hold on 1 second. Let's talk about answers. Does momentum trading actually work? I mean, we've all had great momentum trades and we've all... Okay, that was the beginning. Audio is good. Let me just get one more confirmation. Good. Mike and HH, you guys win. Okay, I'm going to rewind the first 10 seconds. I'm here the whole time to answer questions. Jason, our CTO, is here to answer questions. I'm going to be here afterwards to show you the new research. But these next 23 minutes, my best guess is if you've never seen them before, at the very least afterwards, you're going to honestly look yourself in the mirror and say, wow, I did not know that. And that is my goal. All right, here we go. Let's talk about answers. Does momentum trading actually work? I mean, we've all had great momentum trades and we've all lost on momentum trades, but empirically, does this work? And if so, when has been the best trade entry? Which stocks have worked the best? And what has been the best time to exit? What are realistic average returns? What are historical win rates? And if this strategy is more than simply a reflection of a bull market, then it should have worked during the bear market as well, during 2007 and 8, when the S&P 500 collapsed into the Great Recession. Even further, to really do empirical analysis, we need to look at everything. For example, does a large stock move from the prior earnings release have an impact on the 1 week of trading before the next earnings release? This should be tested empirically, and if the results are meaningful, they should be applied. If momentum trading has worked in the past, it should be empirical and explicit. And that's it. Also, how about technical analysis or technical trading? Does it really work? It's all over social media and fintech news, and if it really does work, okay then. Which indicator has worked the best historically, on which stocks, at what times, when has been the best time to exit? Again, what are realistic average returns? What are historical win rates? It doesn't matter how much noise there is out there. If technical analysis works, the results should be empirical and explicit. That's it. And what about non-directional option trading? Has there been a way to profit without making a directional bet? Without betting on a bull market continuing? Again, empirically, does this work? And if so, when has been the best trade entry? Which stocks have worked the best? And what has been the best time to exit? What are realistic average returns? What are historical win rates? And again, if this goes beyond coincidence, beyond just a bull market or a low volatility period, then it should also work during a bear market and at times when volatility was elevated, like during the 2007 and 2008 market crash. Answers. That's what this is all about. We're going to cover all of this, and we're going to do it pretty quickly. We'll start with momentum, then technical analysis combined with momentum, then non-directional history. All right, let's go. We're going to start with momentum. We'll start with our first pre-earnings pattern. I call this a directional bet on optimism. So one of the least recognized but most important phenomena surrounding this bull market is the amount of optimism that sets in the 2 weeks before earnings. Now, this is totally irrespective of whether the stocks have a history of beating earnings. In fact, many of them don't. But in the 2 weeks before earnings, there is a massive momentum rally into the event. What the scanner will help us see later is that while there is this 2 week pattern, sometimes 1 week or even just 3 days presents a better trading window, both with respect to consistency of the win rate and of course total returns. We'll start with 2 weeks here and address the other time periods when we cover the scanner. Let's look at a simple idea. Let's just buy a monthly call option in Alphabet 2 weeks before earnings and selling the call before the earnings announcement. So we'll get long a call, we'll go to custom earnings handling, we'll open the trade 14 days before earnings, and we will close the trade 1 day before earnings. We are not taking an earnings bet. This is a pre-earnings trade. And here are the results. We can see across the board, this has been a winner. And just to see what's happening, we can look at the stock price. This is a 2-year stock chart of Alphabet, where the blue E icons represent the earnings dates. We can see with the little yellow arrows the momentum that leads into the event. We've also put little boxes around the actual stock movement after earnings. And we can see that Alphabet sometimes spikes on earnings, and sometimes it looks like an earnings miss. The real question we also want to ask is, can we improve this pre-earnings momentum signal by looking at the prior move from earnings? That is, does this earnings beat here have any impact on this pre-earnings momentum the next time here? And equally as important, does this earnings miss here have any impact on the lack of pre-earnings momentum the next time right here? While we're looking at this, we might as well look at the rest of FANG. So I'm just going to put the rest of the tickers in here, comma delimited. Our members have seen the research where we have shown that this pre-earnings momentum is in fact an anomaly. That is to say, empirically, it has worked in both a bull market and a bear market with statistical significance. And it works for lots of groups of companies. But even when we're looking at a small group, like FANG, what we need to do to find the best trades is to focus on the win rates. Netflix and Amazon are a coin flip. Even though the returns are positive, these aren't the best of breed. But a good trade turns into a great trade only after we do risk control. So let's drop a tight stop on these calls and also a tight limit. We'll go down to the close trade when section. We will close these long calls if they go up by 30% in a 2-week period. And we'll also close them if they go down by 30% in a 2-week period. All of a sudden, the trade is clearly an Alphabet and Facebook, not Apple, Netflix, or Amazon. So let's focus on those two. Now we can see the staggering returns, and we can see 15 wins on 1 loss if we held these two as a portfolio. And just so you know, we're not pulling a fast one on you, and that calls always work on these companies. We can just look at the 15 days after earnings. So we'll open 1 day after earnings and close 15 days after earnings. These trades are actually negative. So this is in fact a pre-earnings momentum trade based on the personality of this bull market. While we're here, let's go ahead and look at another trade that's very similar. We'll go to custom earnings, and this time we're going to look to open the trade just 1 week before earnings, so 7 days before earnings and closing it the day before, as opposed to the 2 weeks before earnings trades we looked at with Google and Facebook. And this time we'll look at NVIDIA. So we're going to buy a call 7 days before earnings, close it the day before earnings. We'll put a stop and a limit, and we'll look at the last 3 years. And here we can see with NVIDIA, 11 wins and 1 loss with a 1,352 total return. And if you're wondering how I knew to look at NVIDIA a week before earnings, this is how. The Pro Scanner, which is available to Trade Machine Pro members. We select Pro Scan, then we select Buy Strategy. We can choose any grouping of stocks, but for now, we'll use the S&P 500. Since we're looking at pre-earnings momentum trades, we're going to scroll down to the pre-earnings section. You'll note that we scan for 14-day, 7-day, and 3-day pre-earnings momentum trades. We'll select the 14-day since that's what we're looking at with Google. The scanner automatically sorts the results by win rate. And since the 14-day scan does not use a stop or limit, the highest win rate in this group of tickers is actually the tech gem Akamai, with 10 wins out of the last 11 earnings sessions for a 91% win rate. We can see a 38% average return per trade, and that includes the 1 loss. That's over 38% for just 14 days. The total backtest return is 426%. Finally, we can see Google, and here are the results before we put in the stop or the limit. We can also sort our results by the total backtest return. So this is for the trader that's comfortable with the backtest that has shown a lower win rate but larger returns. Let's now look at the 1-week backtests and just look at the 3-year results. So we'll tap on 7 days and we'll deactivate the other buttons. We can see NVIDIA here, this is a tech darling that has had immense pre-earnings momentum, showing 11 wins out of the last 12 pre-earnings sessions, with an average return of 39% in a week or 493%. For those of us that like trading the tech names, we can select the NASDAQ 100 and sharpen our scan results. We can find a familiar name as well, which is Microsoft at the top of the list. For the traders that really want all the edge they can extract from the market, we touched on it earlier, it does turn out empirically that if the prior earnings report resulted in a large stock move up, then the next pre-earnings period does show greater momentum that is statistically significant, better returns, and higher win rates than the already remarkable statistically significant pattern of the baseline. That research is available only to Trade Machine members. This is our first exposure to the Trade Machine Pro Scanner, and all we have done so far is just look at a very small subset of another subset, which are pre-earnings scans, the momentum pattern. And it's a fair question to ask if these returns are simply due to a bull market rather than an actually robust, successful strategy. But it turns out that this phenomenon of pre-earnings momentum also worked well during the 2007-8 market crash, even in names where the stock was down over 70% in those 2 years, like NVIDIA. Using the constituents of the NASDAQ 100 and Dow 30 as our study group, we saw a 45% return per stock over those 2 bear market years. Yes, this is empirically objective fact. But this leads us to one of the other benefits of the Pro Scanner. We can simply click on a ticker and it will load the back test in our trade machine for us. So let's click on Microsoft, and here are our Microsoft results: 12 wins, no losses. And down here is where the limit gain and the stop loss have already been implemented. We can click on custom strategies and we'll see we are looking at, in fact, this 1 week trade. So we finished step one. We found answers for momentum trading. Yes, it does work. The trade entry can be 3 days, 7 days, maybe even 14 days before earnings. The scanner shows us which securities have worked the best in the past. It shows us when to exit using a stop loss and a limit gain. It shows us what the historical returns are. It shows us what the historical win rates are. So has momentum trading worked? Yes, it has. Our final step is just to go to the Alerts tab, and let's enter Microsoft. And we might as well add NVIDIA with it as well. We'll set an alert for 7 days before earnings. I want an email and a text message. The note to myself is that this is a pre-earnings momentum call. Then I add the alert. Here's Microsoft and NVIDIA. But I also want to be reminded when it's time to close this trade. So I'm going to put Microsoft and NVIDIA back in. This time I'm going to go 1 day before earnings because that's when this trade closes. And I'll send myself a note as well, time to close the calls. I now have created the alerts to let me know when it's 1 week before earnings for this momentum pattern. And also I've set an alert so that I know when it's time to close the trade, should I put it on. Now let's turn to technical trading. While there are hundreds, if not thousands of technical indicators, in the trade machine, we focus on very few. Right now, we're going to focus on what has been called the TTM squeeze, first discovered by famed trader John Carter. This signal is actually a combination of 3 technical indicators to make a single signal. And that signal can either be bullish or it can be bearish. Now, it's always important to understand precisely what a trade is doing. So to understand this signal, we have written a full-blown dossier with the videos. You get to the dossiers by going to the Discover tab, and then looking under FAQ, you can go to Technicals and the TTM Squeeze. And when you tap on that link, you get a full-blown explanation of how this works. So not to run too long, we're going to skip a description, but remember, the details are available through the Discover tab, and there is never an excuse to trade without understanding the facility behind it. And while this might sound complex as we've introduced it, like most technical trading, it really isn't. It's very clever, it's very useful, and it's also very easy to understand. So now we will look at technical trading with options, and we won't pay attention to earnings at all. The idea behind the squeeze is that for the vast majority of the time, stocks tend to move pretty quietly sideways. Then they move abruptly either up or down, and we're not talking about those big earnings moves. That is, we're here to answer the question we posed at the top of this video. Does technical analysis work? Here we go. So we'll enter our tickers. We'll look at 5 of them. We'll look at getting long a call spread, never trading earnings, and doing it during the bull squeeze. We'll set our days to expiration to 15, so we're going to be looking at about 2-week options. Then we're going to go to settings, and we're going to go ahead and put it 5 years back in history. And here are the results. We can see in the 3 mega cap tech names, we got Facebook, Amazon, and Alibaba. We're looking at high win rates and large returns. Then we look at another momentum tech name, Activision, which has 10 wins and 1 loss. And then we just look at another momentum name, which isn't a tech stock, and this is just Domino's Pizza, which has seen 12 wins and no losses for a 423% return over the last 5 years. We can just tap on a back test tile. We can see the total return. We can see the average return. We can see the number of wins and losses. We can see what the stock has done over the last 5 years and how this strategy is done. Another thing to note, if we look at Amazon, for example, over 5 years, this trigger only fired 11 times. This signal was live for only 144 days, so less than 8% of the time. This is a signal which doesn't happen very often, but when it does, it tends to carry a very strong indicator. While we have done the empirical analysis, and the TTM squeeze technical indicator is in fact statistically significantly better than just buying a call spread, which is to say, this isn't just happening because there's a bull market. It's fair to ask, does this indicator work during a bull market trying to find bearish indicators? And the answer is, yes, it can. We can now do the same thing, but with the bear squeeze. So we'll enter our tickers, we'll go to a put spread, we'll go to never trade earnings, and we'll look at the bear squeeze. And for this, we will add 40% limits and 40% gains, and we'll look at the 30-day options. In this case, we're looking at a large cap tech stock a European bank, 2 retailers, that's Kohl's and Kroger, and 1 industrial with Federal Express. And again, we can see when you pick the right companies, you've got high win rates and large returns. The second technical indicator we looked at is the CML Mammoth. That's for moving average and momentum model. And here's how it works. We started with several moving averages. Then we took them and we lined them up relative to where they were for each other. That is, which ones were above the others and which ones were below the others, testing all of the various combinations. We also tested how far apart the moving averages were from each other. That is, were they really spread out or were they tightly grouped together? Then with some machine learning techniques, we found the comparisons and the moving averages that helped predict future stock returns. The next step was to include the current stock price in this measurement, where it lined up relative to the moving averages, and how far it was from them. Once we had a definitive solution for that, we turned to momentum. We didn't only look if a stock had moved up or down on consecutive days, but also by how much. Was it a small move up or a large move up? Or a small move down or a large move down? Finally, we looked at the Bollinger Bands and the Keltner channels, and if the stock was above or below the key levels. With all of that, we were able to build the CML Moving Average Momentum Indicator, CML Mammoth. We have the full details of how this technical indicator was created, including the full equation that allows you to calculate it yourself in the Discover tab with great detail. Now let's look at some of the results. We'll start out by entering 4 tickers. We'll do 2 of the chip giants, NVIDIA and Lam Research. We'll do everyone's favorite momentum stock, Netflix. And then just for a change of pace, we'll look at Ford Motors, the automobile manufacturer. We'll look at getting long a call, never trading earnings, and we will use the Bull Mammoth technical indicator. And here are our results over the last 5 years, using the options that are the closest to 14 days. You can see across the board, the results are enormous, and we can see the win rates. With NVIDIA, we're looking at a 60% win rate. So this trade certainly does lose. But the key to notice here is that this trade doesn't occur a lot. It does occur more frequently with stocks that are more volatile. So we can see that technology stocks have more trades triggered than Ford over the last 5 years. But let's dive deeper. If we tap on a backtest tile, we can see the details. So for NVIDIA, we can see the average return was 40.8%, 21 wins and 14 losses. So an average return of 40% over 35 trades every 2 weeks. The average win was over 114%, and the average loss was 69%. So when this trade goes bad, it certainly is a substantial loser. But the trades win more often than they lose, and when the trades win, they're substantially larger, almost 2 to 1, than the losses. We can take a look at Ford, a less volatile stock. We can see the average trade return, again, this is over 14 days, is 65.5%. with 7 wins and no losses. However, over 5 years, this only occurred 7 times. So it's a trade that requires patience. For completion, we'll go back to the alerts tab. I'll enter NVIDIA. This time I'm looking for the Bull Mammoth trigger. I have my email address and phone number in there. I'll give myself a note, Bull Mammoth trigger. I'll add the alert. And now I will get an intraday text message and email when NVIDIA hits the Bull Mammoth trigger. So that's it. We wanted answers to these questions. Does technical trading actually work? What is the signal for trade entry? It's the bull or bear squeeze or the bull or bear mammoth models. And where do we find discovery of the companies or ETFs where this has worked the best in the past? As always, it goes back to the Pro Scanner. And now we have completed step 2. We have with great specificity questioned, tested, and discovered the results of patterned pre-earnings momentum and technical momentum irrespective of earnings. Our final task now is to answer, what about non-directional option trading? And here we go. It's long been believed and proven that simply owning an at-the-money straddle in most stocks is a loser. In fact, we can do it with our backtester looking at Google. Here it is, getting long a straddle, doing nothing with earnings over the last 3 years, buying the 30-day option. This trade has only a 41% win rate
and is down 57% over the last 3 years. But we started this discussion with a question, which is, what about non-directional option trading? Is there a way to profit from it, even if we go into a bear market or correction? And we want empirical results. Does this work? And if so, when has been the best trade entry? Which stocks have worked the best? And what has been the best time to exit? Since we see normally owning a straddle in Google has been a loser, let's try something different. We'll come down to custom earnings. We'll test opening the trade 7 days before earnings, so 1 week, and closing it on the day of earnings. Since Google reports after the market closes, this takes on no earnings risk. This is a 1 week timed trade. This is just short bursts of risk exposure. When we look over the last 14 earnings sessions for Google, we see 10 wins and 4 losses with a 218% return. And again, this was a 1 week trade with a short burst of risk exposure, which takes no stock direction risk at all. And during this time period, the stock was up 81%, while just owning options for 7 days, 4 times a year, returned 218%. Far less risk exposure, no stock direction risk, larger returns. Remember, when we did this without using custom earnings dating, it was a 57.5% loser. And if you're wondering now, does this pre-earnings straddle work better or worse based on the prior earnings stock move? Like the pre-earnings momentum, yes, there is a statistically significant signal that will help us navigate when the best pre-earnings straddles are available based on the last earnings stock move. That research is available to Trade Machine Pro members only. We can find dozens, if not hundreds, of these opportunities where owning volatility looks like a loser, but timing it correctly around earnings has proven to be a gigantic winner. And the answer, of course, whether it's before earnings or after earnings, is in the Pro Scanner. So we go back to the Pro Scanner, we go by strategy, we pick our ticker group. In this case, we'll just look at the S&P 500. We have the 7 days post-earnings long straddle, or if we prefer, we can look at 7 days pre-earnings, or even 14 days pre-earnings. So these 3 scans find us the companies where owning volatility has been a winner. So we can answer empirically. We do know the best trade entry. We do know which stocks have worked the best, and we do know the best time to exit by using our stops and limits. We started this discussion saying we wanted answers to 3 questions. Has momentum trading actually worked? Has technical analysis actually worked? Has non-directional option trading actually worked? And if so, we should have empirical and explicit answers for each of those. We've answered our questions, and we have been empirical, and we have been explicit. There are other questions that the trade machine can answer, like, has non-directional option trading while selling options worked? And if so, when? And in which securities? And what are the historical win rates? The trade machine was built to answer questions for traders. It was built to be empirical. It was built to be explicit. And of course, it was built to be easy to use. There's so much more the scanner has, including custom portfolio building. But for now, we have succeeded in our goal. We have answered our questions, and we hope you are a more powerful trader for watching. Thank you for your time. Now, of course, we just focused on earnings-related trades. If you like trading the actual event, we have a button for that. You can just click only trade earnings and test any strategy you want, whether it be custom or pre-built during the earnings event. And of course, for all other times, you can always just select never trade earnings, and you can do the same thing. You can create your own custom strategy or pre-built strategies. And finally, it bears repeating, we cover every stock and every ETF and every index in North America as well. The opportunities are there. You just need to find them. So this is it. This is how people profit from the option market. It's preparation, not luck. Thanks for watching.
Okay, hold on 1 second while I plug my headset back in. All right. Everyone can hear me, I assume? All good? Yes, yes, yes. Great. Okay, I'm going to get out of this little movie here because we did that. All right, so I got a lot to fill in. I know the movie for some people moves too slowly, for some people it moves too quickly, and for some people it's perfect, which means it's probably the best we can do. So let me just take a quick step back. And I see your questions, and we're going to get to your questions, don't worry. Let me just take a real quick step back. The backtester, it's this web-based software, right? So you log into a website and here it is. You don't have to download anything. You don't have to buy data. There's nothing crazy. There's no downloading of anything, okay? And there's 4 tabs. There's the backtest tab. For example, this is where I would have checked how Netflix has done. If I bought a call 3 days before earnings, sold it the day before earnings over the last 2 years. I'll just do that slowly. I want to test buying a call, custom earnings, 3 days before opening, closing 1 day before, over the last 2 years, using the 7-day options. Okay, and this is how you get a backtest result. If you click on the backtest, you actually see the details, including every single trade, leg by leg if it's multi-leg, and you can download it into Excel. This is not just sort of summary, just trust us, it's right, not at all. We give you the prices, we give you the trade dates, we give you the P&L, we give you everything that happened. Okay, so that's one tab, it's the backtest tab. The other tab we were talking about, which is actually where I normally start, is the Pro Scanner. And you can search by ticker or by strategy. Usually I start by strategy. So I'll give you an example of something that I wrote about today. Let me just remember the ticker. Right, Ferrari. Okay, so I knew that Ferrari race, a ticker race, had has an earnings event in 3 days. Okay, so I went by strategy. I just selected all tickers. I wanted to do a pre-earnings analysis. So I went down, I chose these guys, okay? I feel like I did the 3 days pre-earnings. Scanner is gonna load, but we're in the middle of earnings season. So I sorted it by earnings date, right? Today is the 1st. And since I was looking at a 3-day pre-earnings trade, earnings had to at least be on the 4th. So I click next. I'm looking at this column right here with earnings dates. And I finally got to the 4th. I might have done the S&P 500 now that I think about it. All right. Right, so this is, I kind of scrolled through here and I found race somehow, some way. Anyway, trust me, it's in here. Then I looked back at race's Ferrari's prior earnings result, and it was a big beat. So this is where you find essentially ideas. I like the NASDAQ 100 because the tickers are liquid. Yeah, you can have options which can actually get good fills. One of my favorite trades is the EA trade, which is 3 days before earnings. Here it is in the last year, right? So if I click on this trade, open a new tab, right? It opens in the backtest tab, and here's what Electronic Arts has done in the last year, the last 4 earnings events. Average trade of 56%, opening 3 days before earnings and closing the day before earnings. One particularly interesting thing about Electronic Arts is that in the last earnings session, so 3 months ago, they crushed it. And that has a statistically significant impact on the results. That is, the win rate and returns tend to be better the next pre-earnings roll. And I'll show you that in a second. Okay, so there's a backtest tab. There is the scanner tab, right? There is the Discover tab, and the Discover tab is where we really post three trades a week. It's not a trading program. That is to say, we don't give you trades and say, take them. These are things that we find interesting that are happening in the market. They're relevant. That is, for example, Ferrari has earnings in 3 days. So we looked at an earnings pattern 3 days before earnings for this company. Same thing with AMD. It was the day right after earnings for AMD. Or Under Armour, which nobody ever thinks of when it comes to momentum. But Under Armour had an amazing pre-earnings momentum pattern, and they beat the last earnings, not the one 2 days ago, but the quarter before. And what do you know? We did the UA trade, and I think it returned 78% in 3 days, right? So you get 3 of these a week. There are also the frequently asked questions, which I love this section because it's videos, like a full user's guide. So this user's manual is actually a movie. It's a 7-minute movie, which just tells you what every button on this thing does, so you know how to use it really quickly. But there's also a couple of webinars we have here, which is one is Volatility Mastery. This is where we talk about the empirical results through the bear market, so the Great Recession, and the bull market. And the reason that's important is not just because you want to have strategies that work during a bull or bear market, but the reality is, if we're all honest with ourselves, is we don't know if we're in a bull market or a bear market. We know that we've been in a bull market. For all we know, in a year from now, we'll look back at today, May 1st, and we'll realize, oh gosh, this was the beginning of the bear market. So you don't even know if you're in a bull market or a bear market when you're placing a trade as of tomorrow. And so you really do need to have research that shows you trades that have worked during both, because you can't even identify what kind of market you're in when you're in it. That's the sort of mystery of the market. A great example is 2009, when I'm sure everyone would have said we were in a bear market, yet you look at 2009, the market was up. That's when the market bottomed and it ripped from the bottom, right? So you don't even know if you're in a bull market or a bear market at any one period. You can only look backwards. We also have this newest research, which talks about how the prior earnings result impacts the next pre-earnings movement, whether that's non-directional or bullish. And it's called Furthering Critical Empirical Research. And this one actually has a password. So if you're a Trade Machine member, you can go to this video, but there's a password. We hide it from the rest of the world because we're finding that the major institutions like Goldman Sachs are starting to copy us. So unless they want to sign up for Trade Machine, which they probably have, it's going to be hidden from them. So we're starting to protect some of our research for our community, so our community can benefit from it and we not just share it with everyone. Okay, so that's a long way of saying there's the Discover tab, and then there's the Alerts tab. Okay, so this is where you put your alerts. You want to know when a trade, you want to get alerted when a trade opens, when it closes, trades you like, you set them in alerts. Okay, so those are the three tabs: Backtest, Scanner, Discover, and Alerts. Okay, I haven't talked about trading at all since the video ended. I just showed you how to use this tool. Now I'm going to stop talking about the tool. I'm going to start talking about trading. Okay, so let's first talk about our newest research. And I'm going to try and bring up a chart for you. Bear with me. All right. Okay. I'm going to try.
This is Jason. Can you hear me okay?
Yeah.
We have a few users asking about what the price of the software is. We will get to, there's quite a few questions. We'll definitely get to them. But that seemed like for people that might have a little bit of a shorter window, sharing that link might be worth it.
Sure. Thanks, Jay. So we have a special going on with Simpler Trading, which for some reason I cannot highlight. Okay. The price of Trade Machine is normally $129 a month. On today's webinar, you can get it for $79 a month using this link. So it's simplertrading.com. That's CML. That's an L, not a 1, CML. Okay. There is no contract here. It's month to month. So you sign up, you don't like it, you cancel. And for anyone that signs up in the first month and you don't like it, maybe you paper trade or something, you don't like it, you can cancel it and you get your first month back. No questions asked. Just say, hey, I didn't like it, I want my money back. No problem, you get your money back. So you're getting a 40% discount through Simpler Trading on this webinar right here. It's simplertrading.com/CML. That's an L, not a 1. CML, Capital Market Laboratories. Okay, so I'm going to leave this here for like 5 seconds and then I'm going to get back to what I was talking about. So everybody can see the link, simplertrading.com/CML. I should really put like a and your price, by the way, your price will never go up. Just so you know, as I need everyone to know this because we get complaints every time this happens. It's not going to be $79 a month for very long. We're raising the price. Okay, I'm just letting you know. Just know it. We're going to leave it up for like the next 3 or 4 days, but that's it. When we get emails to support 4 weeks later that say, hey, you promised me the price. No, we did not. We promised you this price, this special for John Carter, someone I've known for a long time that I respect as a phenomenal trader. I've known him for more than a decade. This is a special price for him. This is a special price for you. And the special price is special because it goes away. simplertrading.com/CML, $79 a month. All right.
And just one more time, just for ultra clarity, it goes away for new users. For as long as you stay signed up, your price is locked in for life. So we've added more features and we've raised the price from when we started, and everyone who's a member now will enjoy that same price for the next 10 years as long as they stay on board.
Yes. In fact, here's a cool fact. We have one user that's paying $29 a month. Our first sale ever a couple years ago. We first introduced it. We have one person paying $29 a month and their price will never go up. It'll So good for that person. I'm obviously not going to say who they are. They're not someone I know. I just know them by their email address. All right. So I'm going to move this. Okay. It's simplertrading.com/CML. All right. By the way, on that page is a lot more about the product. So it's not just like, hey, pay. There's videos and stuff. So, it's a helpful page to look at, even if you're not sure yet. Okay. So our newest research shows two things. All right. First of all, it shows that if a prior earnings result was a large move up, and I'm going to save what large means for members, it's a certain percentage, okay, a large move up, then there tends to be even greater pre-earnings momentum the next time. So this large move up tends to impact this pre-earnings momentum. Oddly, in Palo Alto Networks, they had another big beat, and it impacted the next pre-earnings. And Palo Alto Networks had a big beat last time, and you can imagine what we're thinking for the next earnings release coming in a few weeks. But just as importantly, right, there's two sides to this. A large earnings miss tends to show much less pre-earnings momentum, no matter what the pattern was before. Okay, does that make sense? So if you see something that looks amazing in the past, but the prior earnings, for whatever reason, was a gap down, and again, we define gap down very specifically for members, you might want to consider passing on that momentum, even if it historically looked good. So we are bringing the immediacy of the most recent history to a broader 2-year or 5-year backtest. Okay, now, I've only talked to you about directional bets. It's true about non-directional bets as well, but it's the opposite. So if you're looking at owning a straddle 1 week before earnings, selling before earnings, because nobody wants to own those big earnings moves or failed earnings moves. If the prior earnings event yielded a big move down, the average return for owning a straddle 7 days before earnings was 3.5 times larger than if the stock had done nothing in particular. That's 350% larger. And if the stock had a large move up, it turns out owning that pre-earnings straddle is actually a loser. It's actually a loser, no matter what the history says. So we are bringing the immediacy of the prior event to the history of the last 1, 2, 3, or 5 years. Okay, so that is what our newest research shows. So what I'm going to do now is start answering some questions. But one last thing I do want to talk about the software. First of all, you can do any strategy you want down here, including iron condors and custom strategies. If you want to build a butterfly, for example, you would do it with a custom strategy. I'm going to show you, I see some questions about, I saw some questions about ETFs. We do cover ETFs and indices. So any ETF or index, it's in the application. In fact, I'm going to show you now, for whatever it's worth to you, my favorite trade in an ETF. Yes, income trades can absolutely be tested as well. In fact, Maisie, I'm going to show, right after this, I'm going to show selling straddle, actually selling an iron condor. This is my favorite ETF trade. It's one that not a lot of people know about. It's one that was copied by Morgan Stanley. This is what I'm going to do. I'm going to build a custom strategy. Okay, so this is what I'm going to do. I'm going to say this is a call calendar spread. I'll call it weekly. Okay. All right. I don't know why I gave it such a long name.
And we had a question, again, this is Jason Hitchings, I'm the CTO at Capital Market Labs. We had a question about butterflies, and so just if you're curious about other sorts of strategies, whether it's butterflies or iron condors or diagonals, you'd build it exactly the same way here. So this is for the sort of slightly more sophisticated strategies than just kind of the couple of leg option strategies.
Exactly. So what I'm going to do is I'm going to buy a 30-day by 30-day at the money calls. So I'm just going to buy an at the money call, a 30-day option. Okay, no problem. But what I want to do is sell a weekly option that's further out of the money against this monthly option. So if the ETF or stock, doesn't really matter, doesn't go up, I don't have to eat all of this decay. Okay. So just to be clear, oh, oops, I want to go short that. Sorry. So just to be clear, I'm buying a monthly call option at the money. I'm selling a 20 delta weekly option, and I want to sell this option, this weekly option, every 7 days as long as I own that 30-day option. So I uncheck this box. This box says close all legs with the front month options. No, I don't want to do that. Okay, so this is a diagonal calendar. Okay, I'm going to save it, and I'm going to apply it to, this is a good thing. I'm going to apply it to an ETF. It says I'm getting an error message because I say I'm doing something with earnings, but there are no earnings here. So I need to take off that. Okay. Yeah, if you ever seen that message in orange, it just means you're probably looking at ETF and you're looking at earnings, but there's no such thing as earnings in an ETF. Okay, guys, this is the XLF. This is the financial ETF, right? There's no earnings events in the XLF. It can't go bankrupt. It can't get taken over. This is the last 2 years. XLF has been up 48%. Okay. This strategy has been up over 1,000%. Okay. And if you want to see every single trade, and it's a lot, you can download. There's 42 pages of trades, right? You can download it all into Excel, look at each one, see what happened. Okay. If you're wondering if it works with the SPY or the SPX, I'll just do SPY because they have cheaper options. So on these extra large back tests, you're going to see the wheel spin a little bit. So it's worked a lot better in XLF than SPY. Okay. For those of you that are kind of volatility experts or understand the movement of financials as it pertains to a bull market, you'll understand what's going on here. If not, and you become a member, you get to email us and ask. Okay. Someone asked about making a butterfly. So I'm just going to make it and not test it. I'm going to add a strategy. I would short a 50 delta call, right? 10 of them. I would buy the 25 delta, only 5 of them. And I would buy the 75 delta, only 5 of them. This would be a 25, 50, 75 B-fly. And save it. And now it's going to show that the butterflies don't work great in these two. Actually work pretty well in SPY. That's pretty good. Yeah, SPY's have been up 32% and selling the juice has got benefits for. That's pretty awesome. And all of your custom strategies end up being in a list. So I have a lot. Here's the one I just created. And so that's how you create it. In the custom strategies, you can do up to 4 legs and you can include stock. So if you say, oh, I want to sell stock against a long option and then do a call spread, you can do whatever you want. Okay, so you can create any strategy you want. Now I want to go back to the Pro Scanner and show, trying to answer some of the questions about sometimes selling options is better than owning options. So there's this, one of my favorite trades, it's an after earnings trade. We'll look at the NASDAQ 100. Is selling an iron condor after earnings, okay? And especially an out of the money iron condor. So I'm going to click that and see which ones have worked. And I've given away too much. CA, which has earnings in a week, has had phenomenal results with this iron condor. And another company's done quite well too. Facebook. By the way, that was actually really good for you. You can use search in here. So we have a search capability. If you just want to search for ticker, just go Facebook. Let's look at Facebook. All right, and I actually want to look over the last 2 years. Wonder how it's set up for the last. All of this is interesting to me. All right, so Facebook over the last 3 years, if you sold an iron condor, so you sold the 35 delta call and put and bought the 35 delta call and put, this is what would have happened. If you would have done it in CA, a member of the NASDAQ 100, right? That's what you're getting. And you can see trade by trade. So there are ways, of course there are ways to own volatility, to sell iron condors, to sell straddles, to buy calls, to sell call spreads. There are things you can do to produce a portfolio of trades that have high historical win rates, good historical win versus loss percentages. And what I mean is that when a trade wins, it wins more than it loses. I'm talking actual percentage. It wins more often than it loses, but also the wins are larger than the losses. And you can have strategies where you own volatility, where you owning volatility, meaning you own options or you sell options and you create a portfolio. And if you have a diversified portfolio of option trades based upon empirical results, you've at the very least put yourself in the best position possible to capture all of the patterns that have existed over the last several years that are totally free from the shackles of the market going up or down or the VIX going up or down, because your trades are on both sides of that, right? That is how professional traders, that's what we did on the floor. You don't find an option market maker. I was an option market maker on NYSE Arca and on SIBO. We don't just get balls long, right? And like, oh, we own 15,000 calls. We just don't do that, right? Everything we do is we spread, right? The only way to hedge an option is with another option, right? So that's what we do. We try to create a portfolio while the market's taking our markets to create things like this that have a historically good perspective that are diversified. This is how you win in the option market, right? Well, let's put it this way. In my over a decade in the option market, this is how I have won in the option market. There's lots of ways to win in the option market. There's no one way, okay? So selling iron condors, buying pre-earnings calls, whatever. One trade I really wanted to show you was Netflix, one of my favorite trades.
Just to pepper you with a little question of fear, this probably seems obvious to everyone at this point, but a user asked, do you use the software yourself, or do we use it generally, or is it just something we're selling? Which is a fun question.
Yeah, that's a fun question. Yeah, I use it all the time. I use it so often that when I post the trades on Twitter, I have to say I'm doing the trade, and I even tell you the prices that I got. It's not a part of the service. It's just that I feel so, I don't have to, I just feel so compelled that like, I just have to tell people I'm doing this trade too. So just so you know. So yes. Why do you insert a comma after the stock symbol? Great question. So if I don't insert a comma, I get a ton of deltas, 60 delta, 50 delta, 40 delta, 30, right? Which is, this is how you check, like, which delta should I use? Actually, John's intro was awesome. Like, this is a 3-day pre-earnings Netflix call. Turns out the 30 delta is the best way to go. If I put a comma, I only get, I'll go to my settings, I'm only going to get the middle one. But the nice thing about a comma is it allows me to look at lots of stocks at once. So I can look at Facebook and Under Armour and Amazon and, I don't know, NVIDIA, right? So if you put a comma, you can get a list. This is the trade we did with UA, which just crushed it this time. And if you don't put a comma, then you get all of the deltas for one stock, okay? So by the way, you don't have to remember that. If you go to the Discover tab, which I had open somewhere, oh yeah, sorry, it's on the wrong thing. If you go to the Discover tab, it's in here. Traders, this little user manual. It's a really short movie. It's like 6 minutes. It just tells you the little things I just said. Here's how you change the deltas. Here's how you get multiple stocks. Here's how you get multiple deltas. So it tells you how to do that. One last thing.
Yeah, and a user specifically asked, like, can you test any delta you want to? So.
Oh yeah. Okay.
There's a few levels.
Yeah. So for sure, you can. You go in here in the settings. You literally can put any delta you want, like 61.7. It doesn't matter. Any delta you want, you can test. That was pretty quiet.
And there was another user who asked about essentially execution type, but how do you know if you're trading mid-market or on the bid or ask, or how that works?
Sure. So you can test different execution types. I want to say this out loud. I don't care if you're trading stocks, futures, or options. Never, ever, ever place a market order. Never, ever, ever place a market order. Even if you want to buy or sell at the market price, use a limit, right? Let's say a market is 75 cents at 76 cents, and you're perfectly willing to pay 76 cents for the option, then you put a limit buy for 76 cents. You don't put a market order. Never, ever, ever put a market order in. That button should be disabled on all brokerages. I feel like they should get sued for even having that button available. Always put a limit. Even it's for the price at the market. Use a limit. Use a limit. A market order leaves you immense liability. Immense liability, right? A market could be 75 at 76. A market order could come in. That 76 could go away, and the market could go 75 at $1.50. And guess what you're buying at? You're buying at $1.50. And you cannot take it back. There's no undo in trading. Don't use market orders. We backtest using mid-market because we use liquid stocks. This was actually requested by our user base. We asked our users, I hate the word users, we asked our members what they wanted in the pro scanner, and I was sure they were going to say kind of halfway between mid-market, which is like not great execution. You could probably do better, but it's certainly conservative. And they said, no, do mid-market. We get mid-market execution. So that's how we do it. So, but you can definitely test it, how sensitive something is. All right.
Yeah, and put another way, Brad from Iowa asked specifically, do we take into account, the spread? So essentially, yes. In a lot of our testing, we've, frequently used halfway between or mid market. But yeah, you can factor that in yourself.
Here's a great example, Brad. Here's EA. This is just testing buying a call 3 days before earnings and selling it the day before earnings. Here I'm using, mid market, which is basically the best we can do probably. Great, 228% for wins. Now I'm using halfway between mid and market just to make that sound like English. I'm going to give a ridiculous market. Let's say a market is $1 at $2. Mid market would be $1.50. Halfway between mid and market would be halfway between $1.50 and $2. So it'd be $1.75. So market's 1 at 2, you pay $1.75. If I do that, the return goes, it's still 4 wins and no losses, and it's a 228% return to a 201% return. It's, very, very similar. So that's why we like the NASDAQ 100 stocks or the Dow 30, because they tend to be so liquid that I'm never going to say execution doesn't matter. Execution matters. But they're liquid enough that even if you don't get the greatest execution you wanted, you'll be very close to the backtest results with respect to mimicking what the backtester is doing. Okay. Whew. Can you link the software to a broker? Not yet. What browser does the software work best in? It works best in Chrome. You can use Mozilla if you want to, like Firefox. That's fine. We like Chrome. So I would use Chrome. What is Ophir's Twitter account? Ophir's Twitter account is right here. Okay. Ooh, I have a blue check mark and everything. It's at Ophir Gottlieb. So that's how you spell my name. That's my Twitter account. Feel free to follow. Okay, I'm going to take this down because this just feels very self-serving to show my Twitter account. So there you go. One thing I want to show you guys, when we talk about putting in new features, this is what we mean. I'm going to show you our production box. Okay, first, this is what, sorry, that was a development log. Production looks like this. Custom earnings, you can say, oh, open number of days before earnings, number of days after. I want you to note this space right here is totally empty, right? Okay, totally empty. Keep this in the back of your mind, totally empty. Our development box now, if I hit custom earnings, all of a sudden, only trade if the last earnings stock move was up or down, and then whatever you want, 3%, 2%, 1%, 6.7%, whatever you want, and you check that box. We're that close to releasing it. And on our scanner, right now, our pro scanner looks like this. If I did the NASDAQ 100, and let's say I like looking at these 7-day pre-earnings long calls, which are generally very good trades. So that's development. I'll do that on production too, so you can see the difference. Again, just looking at buying a call 1 week before earnings. Okay. You'll see here that you get all these results, blah, 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 blah. On development now, we have the last earnings move. So we're showing you empirical results that say this momentum tends to be stronger if there's a large earnings move. We define what a large earnings move is if you're a Trade Machine member. You can now find them, right? So IDX, a bit late for this trade, has pretty good pre-earnings momentum, but its last earnings was a gap up. And now you can find that in the scanner. right?
Yeah, and for anyone who's wondering, so we've heard a couple comments like, "Hey, I love the software. Does it do X?" So the way that we've built this software, and we've gone from 1 tab to 4 tabs in the last 18 months. And the way that we build the software is we just ask our users what they want. We create a list and we figure out what on that list can we do quickly, and we crank that out. Sometimes stuff on the list is hard and it takes a little longer, but we move very quickly, and it's really nice to form these kind of relationships with these are, Ophir and I think of you guys as like people who get it, like some of the best people out there, super smart. When you ask questions about the software, you ask the questions that we would ask. But it's really nice to build that kind of community because when it comes time to build the next feature in the software, we have people who are asking for things that are really helpful and that actually improve people's trading. There's a lot of other places out there where people could be asking for something completely useless. So that's how we build to the software, and that's kind of one of the benefits on both sides of becoming a member of the community is we benefit and you benefit from that idea circulation.
Yeah, really, really well said. Let me answer a couple quick questions, which are super, super important. Can this Ophir, can this tool be used for pre-earnings? Can also be used to find swing trade candidates. Sorry, this list is growing really fast. I'm trying to read. Yes, it can definitely be used for swing trading candidates that have nothing to do with earnings. That's why we have the technicals in here. So, for example, one of my favorite bull mammoths. Actually, I'm not going to tell you what my favorite bull mammoth is. I'm just going to show you bull mammoths. I feel like I say too much sometimes. So here's, I sort by win rate. So some of my favorite bull mammoths, Facebook. Mammoth is our own proprietary machine learning technical indicator. Having said that, it's not a black box. So if you go to the Discover tab, you're like, oh yeah, great. You guys have this new cool thing. What is Mammoth? You go to Mammoth. We tell you, guys, I went nuts and bolts to the statistics to the point where you can write the equation yourself on a piece of paper. We tell you exactly what it is. Okay, so no black box. But yeah, this is where I find my swing trades, right? Facebook, when it gets triggered, you get these are intraday updates. The best way to do it, though, of course, is go to alerts. Right, and it's like, hey, I want to know. I'm not going to show a really cool shortcut because I just don't want to. But let's say Facebook, Lamb Research, Nvidia. You're the stocks you love. I mean, I can't tell you which ones. Ford. I want to add those 5 stocks. I want to know when a bull mammoth is coming. Email me, ophir@ophir.com. That's not a real email address. Don't try. Phone number 555-555-5555. That's not a real phone number. Notes. Great. Mammo trades I found. So now I add those alerts, and I'm going to get a text message and email when these guys trigger. These trigger, remember, sometimes they trigger once every 9 months, but when they trigger, boom, I'm going to get an alert. That's how you get a swing trade. Also, you can do the same thing with TTM squeeze. One thing I want to say about the TTM squeeze, what John has had Thinkscript program into their platform. Ours is a little different than his. It uses he's the inspiration. Inspiration is like an understatement of what he is, but he's the inspiration for it, and it uses the Keltner channels and the Bollinger Bands and all that. We just use slightly different settings for the number of ATRs and things. We tell you exactly what it is in the Discover tab, but so our TTM squeeze results and triggers will be a little different than the ones you find on Thinkscript. So just know that, right? It's 2 different versions of the TTM squeeze. Same indicators, different triggers. So if you want to look for swing trades, you would go into alerts and you would go ahead and say, hey, I want the bear squeeze triggers. Also, don't be afraid to look for bear squeeze triggers or bear mammoths, right? Sometimes it's good to buy a put spread during a bull market.
Yeah, and I think there's actually a few questions here which all kind of intersect. So some people are asking about the differences and why there's differences, and also just about why we have the technical indicators that we do in the product. And it all kind of comes together. Actually, someone also asked about statistical significance. So I'll just do a real quick answer, and then Ophir can dive in and give a more full-fleshed version if he wants to. Basically, our process for anything that we add into the tool is just that we test the junk out of it until we're extremely satisfied that we, for ourselves, want to use it for our own trading. And so we've tested a ton of historical, technical indicators across a whole bunch of different market conditions. And we do have some interesting ones up in the queue. But before we add anything to the tool, we test it not just against a handful of stocks, but we test against the entire market, not even just for the past 5 years, but we also have more historical data that we use to establish that statistical significance. And then once we're close, once we're confident we have a winning strategy historically, we take it to the next level and we tweak it. And there's a lot of different things you can do with machine learning and other stuff to look at every single parameter and say, you can't tell the future, but what you can say is that, during the past bear market, during the past bull market, the last 5, 8, 10 years, these specific settings, this amount of distance between the channels, between the Keltner channels and the Bollinger Band, this number of quiet days, this much of a stock movement before you rose, was the best. So we could put the exact version that John has in there, and we understand that that's useful to the people in this community. But as a service to all of our members, we had to put the best version that we possibly could based off of our historical data. That's how we built the Mammoth, and any new technical indicators that we put in the product are going to get the exact same treatment.
Yeah, and here's our statistical significance. We share everything, right? So the model's statistical significance was greater than 99.999%, and each element that made it in, the least we had was 97.9%, right? So we're well past the 95% confidence interval. There's a reason why you shouldn't use 95% anyway, but that doesn't matter. That gets well into mathematics. Okay, so just so you should know that our bear model as well, right? So 99%. So yes, to answer the statistical significance question, yes. Statistical significance adjusted for the number of factors you're looking at. So done the real way, not stats 101, stats, professional. Okay. When is a new feature coming out? Soon, let's say a week probably. I don't know. Are there any tickers with more losses than wins? Absolutely, there are tickers with more losses than wins. My goodness. I wish that everything won. It's quite the opposite. The question is, are there any tickers with more wins and losses? Are there any intentions to look at international markets outside the US? Not yet. Do you guys offer training seminar for members? We do. Can you consider implied volatility in the back test? Okay, that's a good question. Like, why don't we are probably at some point going to have the IV rank as like a way to buy or like say, okay, I only want to buy a call if the IV rank is below 50. I don't know, whatever. Just as an aside, if you go to www.cmlviz.com, this is our free site. There's a purpose for this. If you go to risk charts, you can actually see the IV ranks for every company. So like for Apple, you can see where Apple's IV is right there, the blue dot relative to its history. We don't have it in the product yet. We probably will. The reason I haven't put it in, or Jason and I haven't put it in, or everyone hasn't put it in, is because I have some pretty strong feelings about volatility cycles, which make it difficult for me to encourage back testing on what I think could be a noisy parameter, which is a very fancy way of me saying, if you got good results, I'm not sure they're actually good results. I think it could just be luck. But we have to test it and see if that's true. But that's my inclination. I was a volatility trader. Actually, everyone on this webinar is a volatility trader because option trading is volatility trading, whether you mean it to be or not. So that's why we don't have it in. So the answer is no. Having said that, it has crept up to the top of the development list, or pretty close when we do a survey. So my best guess is I'm going to get overridden by our members, who always win, and so it's possible we'll have implied volatility in there. The average return is based on getting out at what profit percentage? So that depends, right? So this is EA. I have a stop and a limit at 40%. And so then you can see the average win and loss. The reason the average win is larger than 40% is because we use end of day data, well, close to end of day data. So we don't close at 40%, we close at whatever it was at the day. Okay. You don't have to use stops and limits, by the way, guys. I just have them in there. That's not hard coded. I could put 0, right? I'm just curious what the results are now. Okay, exactly the same for this one trade. So there you go. Is testing period statistically significant? Only up to 5 years. The testing period we use to get things in here use 6 years, 2012 to 2018, and the bear market from 2007 and 2008. Is there online training on how to use Trade Machine? Yes, absolutely. You go to the Discover tab, you go to the full Trader's Manual, you'll get a video. I'm going to play like 3 seconds of it, not even. I just want to find there's like a table. Ah, there it is. Okay. It's like a 7-minute video, but it just goes boom, 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 boom. Like these 11, this is how you use it. It's fast, but it's not about trading or momentum or technicals. It's literally like, this is what this button does, and this is why you might want to know about it. So yes, when you sign up, there's a welcome email you get automatically. Read that welcome email because it's so worth watching this 6-minute video, just so when you actually get to the tools, you're not looking for buttons and wondering how to do what that guy did on that webinar that one time. You're like, oh yeah, I remember this, no problem. So yes, there's definitely training videos. And it's short, so it's not that long, it's 6 minutes, whatever. Can you scan for mammoth trades triggering today? Sure, I could scan for mammoth trades triggering today, but if you're not a member, then I'm not gonna show you. What's the difference between Pro and Lite? There is, so we used to have 2 versions, Trade Machine and Trade Machine Pro. We just made everything Trade Machine Pro. This is going to sound amazing. We put in the scanner. That was there's one Trade Machine that only had the back tester. Then we put the scanner and we call it Trade Machine Pro. We told everyone we have a scanner and the price is going up if you want it, whatever. And 100% of members converted. So we just said, okay, we're not going to sell the cheap for the version without the scanner anymore because that's just silly. And by now we've added so many scans and so many more strategies in the Discover tab and Alerts tab that everything's just Pro. Okay. Do the squeeze strategies allow for different time frames? Yeah, absolutely. So let's test a squeeze. It's weird, but Ford actually tends to be a good squeeze candidate. Bull squeeze. Yeah, you don't want to use the 14-day options. You do want to use stops and limits. Maybe Ford isn't a good squeeze candidate. Okay, here you go. Yeah, so you can, I don't know why I'm guessing when I have a scanner here. I'm so silly. Okay, what's the best bull spread, bull squeeze? Okay, here we go. And the NASDAQ 100, sort by the win rate. Okay, ooh, net ease. I bet you John has doing net ease all the time. I bet you guys do Tesla all the time too. See, John somehow knows it. Yeah, so like Tesla squeeze. I use 15-day options. So the closest to 14 days. This is what Tesla's done with our squeeze over the last 3 years.
Oh, fear we have a pressing issue. Rose says she's hungry. Can you give me the link so I can sign up, please?
Rose.
She needs the link. She needs to eat. We had several other users ask also.
It's simplertrading.com/CML. This is what the page is going to look like, guys. So I'm going to try and, man, hypothetically in Windows 10, you can do this. No, you cannot do it in Windows 10. Okay. And then here. Oh my God. Just so you know you're on the right page. Okay, here. That's what it's going to look like. Okay, so. And here. So this is the URL. simplertrading.com/CML. It's going to look at, you're going to see Simpler Trading CML. So you're going to see, oh, that's how you know there's the discount. You're going to know you're getting the discount. By the way, on this page, there's this video, but there's also a video about the scanner too. There's more to read about. You can read like who are these people? Who is this guy talking who refused to give his bio because people don't want to hear it? Who is Jason Hitchings? You can read all about that too on the sign up page. Okay. All right, guys. Does it allow members to add indicators? No, we do not allow that. Can you scan for squeeze trigger on any stock in the NASDAQ? Yes, you can.
Someone asked if you could do both a squeeze and a mammoth at the same time. Well, what you could do is you could sign up for alerts on all the bulls, the mammoths, and the squeeze. And if you got an alert the same day, then you could trade it.
Exactly. I have so many documents. Okay. All right.
Oh, so someone asked about the not verified. That's just for earnings. We use a really great source for earnings. Use Wall Street Horizons, and they say whether they feel there's 100% confidence that the earnings is going to happen on a certain day. So if we're not 100, if they're not 100% confident that that's the actual earnings day, we just give you a little heads up, like it's possible it could shift by a day. So, if you have a trade that's very sensitive to that, then you should keep an eye on it.
Yeah, for example, Wynn's next earnings date says July 25th, but that's not verified. That's their best guess. When it's verified, it's very clear. Like Regeneron's next earnings are 5/3, are in 2 days. It's just happening. For Apple's earnings were today. Gilead's earnings were today. So that's what verified and not verified means, and you should definitely pay attention to that. Just because if you set up a very sensitive earnings trade with a few days, you want to make sure that date's actually not going to move, because as you well know, that could blow up your options. Can you show an example of an SPX back test? I think I already did that. Does it include data for futures? It does not.
We have a decent number of questions about people asking for the time frames for the options. So again, the trades are placed at the end of the day, and it's the trade machine is based off of holding trades for longer than intraday. And in terms of time frames for weekly or monthly or that kind of thing, if Ophir will click on the back test, yeah, where you see that days to expiration in the top right corner.
I think I'm asking about the squeeze actually. Yeah, sorry, go ahead.
Well, I've seen it on both. Yeah, so you can, but for anyone who just wants to know, like for weekly options on the SPX, that was a question. Like, yeah, that days to expiration will tell you if it's, weekly or monthly or whatever.
Yeah, so here I'm testing basically the weekly options on EA. If I wanted to test what it would be if I tried the 14-day options, the results go down a little bit, which makes sense. And if I wanted to use a monthly option, if I wanted to use a 2-month option, whatever. You get that. Whoa, that's crazy. That's crazy. Yeah, and then for the squeeze, we let you know what we use for the Bollingers and the Keltners, all in here. I know a lot of you guys are saying, hey, I just want John's TTM squeeze. I think that the momentum of your desires may be overtaking us, and we might just have down here pretty soon TTM, like JC bull squeeze, JC bear squeeze, and then you can get alerts for those and test those yourself. If we do that, it ain't going to be a $79 product. So if you want it, you better get it now. Because the second I start putting John Carter stuff in there, I got to talk to John about it. Yeah, I think we have had like an overwhelming demand for that. So we perhaps will do that. By perhaps, I mean, of course we're going to do that. I just don't know when. Is it going to be in the next month or the next 12 months? I don't know, but we'll probably do that. Or we will do that. Do you sell this software one time or for life? No, this is a month, right? So $79 a month. But you can cancel at any time. We don't do yearly. We don't even allow a yearly subscription. Like we don't even have that. And remember that it's a really great way to use the software is to subscribe for a month, maybe paper trade a couple things, either our Discover or the stuff we send on Discover tab or your own ideas. Feel like it's not helping your trading, or it would not have helped your trading because of paper trades. Just say, hey, I don't like it. I want my money back. I'm almost positive you won't say that, but absolutely, if you do, yeah, you should get your money back if you're not happy. Why would you not? Can you filter on a stock and then have the query show which strategy is best? Yes, you can. Go to the Pro Scanner. You can enter as many, if you have Chrome, you can do this. Enter as many tickers as you want. Let's do Apple, Facebook, Amazon, NVIDIA, Netflix, Google. Okay, good enough for me. Click outside the box. This will now show every single strategy for those 6 stocks. You can sort on the average trade return. The best trade of these 6 stocks has been the Netflix 14-day pre-earnings long call. The next best one has been Google 14-day pre-earnings long call. Let's only look at the last. I like looking at the last year, actually. Kind of a short-term guy. Right. So the best trade has been the Netflix 3-day pre-earnings, then Facebook's Mammoth. And you can look at things like that. NVIDIA's Mammoth has been awesome in the last year. So yeah, you can put up to 100 tickers in here and just look for the best ones. Also, if you do a bunch of tickers, let's just say this was a group of tickers that was too long for us to remember. I don't know, because we just put so many. You can just search and be like, well, yeah, I know I did that list, but I'm actually looking for the NVIDIA trades. Oh, the NVIDIA Mammoth, awesome. Then you click on it and say, what is the NVIDIA Mammoth? Oh yeah, this is what it is. So yes, the scanner is a portfolio tool as well, right here. Just put as many tickers as you want and look by strategy. Or look by ticker. Look by ticker. Sorry, not by strategy. All right. ETFs work as well. Do ETFs work with a Mammoth? Absolutely. So that's a really good question. I'm curious now. This will be the last thing I do. QQQ, XLF. Maybe the utilities, just because we're crazy like that. Yeah, totally. Bull, Mammoth. I don't think those deltas will work very well. Yeah, it's not going to work on those deltas. Let's try 70. Call spread. Sorry. And let's do 14-day. Oh yeah, so some oh, that's weird. Mammoth hasn't. Oh, how? Okay. Yeah, so some of the indices it works great, some of it doesn't work so great. You put in whichever ones you want. Yeah, I was going to try IWM as well, the Russell 2000, but you get the idea. You can definitely use ETFs on anything. You just can't use ETFs on pre-earnings trades because there's no such thing as earnings in ETFs. Will your results be diluted if you get 1,000 new subscribers? They will not. That's why we have passwords protecting our research now. We can handle quite a bit more. Although what's nice is that our community does command a fair amount of the options market, which is great. It creates greater liquidity, believe it or not.
We had some, yeah, a lot of these big names get an insane amount of trades. I mean, we'd have to have hundreds of thousands of subscribers to really like push this stuff around. Someone asked about, are there sort of like weekly updates on how to best use the tool? So I thought that was worth mentioning, that in the Discover, there's handwritten research often by Ophir on things that we found, trades that we think are cool, things that we're doing, and that gets updated. You can see April 30th, April 27th, etc. So comes through quite a bit. Also, in terms of support, yeah, you can ask us support questions anytime. We have a dedicated email address for that. Once you sign up, you'll just get that email address sent to you, and you can ask us questions anytime, and we'll get back to you, and we'll give you as lengthy an answer as you need.
Yeah. Someone says, can you help me stay out of bad trades? Yeah, it can definitely help you stay out of bad trades. I'm going to show you a bad trade right now. One that nobody believes me until they see the results. As much as I love momentum, and you can love Amazon, and I got no problem with Amazon and everything, Amazon does not have 1 week pre-earnings momentum. This is what's happened in the last, this is not an opinion. Let me change the delta. This is not an opinion, right? This is objectively observable fact. I'm not giving you my opinion and showing you this tile. This is a fact. This is what has happened, right? It's won the 2 times out of the last 4, and an 8% return is basically gone with any kind of slippage. Over the last 3 years, it's won 6 times, lost 6 times, 2 times. And yeah, if you're going to do you want to do that pre-earnings momentum, it ain't Amazon, which sounds weird, right? Because you would think, oh my God, Amazon's going to have this crazy momentum. No, it isn't. It isn't Amazon. So yeah, you can stay out of a lot of bad trades. A lot of bad trades would surprise you. A great example here is maybe my favorite ever is Netflix. Let's say you wanted to do 14 days pre-earnings Netflix calls. Oh, I have to use 14-day options. Oh, actually looks great. Okay, so here's how Netflix looks if I did a 2-week pre-earnings trade. But what if I did a 3-day pre-earnings trade? Okay, it wouldn't have worked. So there's a great way to stay out of a trade, right? Don't do that trade. Do a trade that takes on longer time horizons. So that's what it's designed to do. The point is you're supposed to get in here, find a general idea, and then try to tweak it just a little bit to find exactly what works for you.
One of the users said that CML has kept me out of bad trades for over a year. Thanks for the help.
Yeah, that's
Thanks
great.
for that.
Do you say you do most of your option trades at the end of the day? Our back tester uses near end of day prices. I do my option trades at various times, usually near the end of the day. Okay, I am going to call it quits for now. Any more questions you can send. If you become a member, you'll get it in your email. But Actually, I'm not going to put it. Everyone will email us who's not a member. Members only. You can send us emails, and we know that when you first kind of jump into the software, even with the, the 6-minute little kind of intro, yeah, it can be kind of overwhelming. You're like, hey, Ophir did this one thing with this ETF, this like calendar spread, and like, what was that? Or he showed me this one thing about Netflix. I was like 2 weeks versus 3 days. And how did he do that? That's very common for new people who are coming on board to just kind of have that general like question. And that's what support's for. We'll say, oh, we know what you're talking about. Here you go. So this is it. I just want to say thanks to John, as always, for just being the human being that he is, aside from being the trader that he is. I'm so happy that I got to know him when I was head of algorithmic trading at LiveVol on the floor. Just our paths crossed, and it's just been a great relationship since then. To all of you people who work with Simpler Trading, who are trade with Simpler Trading, cherish John, cherish the people he has with him. It's a magnificent service, and it's just, my goal is to help retail traders have the same advantage that unfortunately I built for the institutions when I was an institutional quant. And I'm not sure that anyone does it better than John Carter. These are the tools the pros use, and that's what we're offering to you as well with our feedback and our trade analysis. You can get it at simplertrading.com/CML. It's a 40% discount. Your price will never go up. You can cancel at any time. It's a month-to-month contract. You don't like it after the first month, just tell us. I'll send you a refund. This price will go up soon. And I think that is all I have to say. Jason, is that it?
I think that's it. Yeah, thanks everyone. There will be a recording sent out. It's web-based software, so there's nothing to install. And feel free to ask us more questions through our email system if you decide to sign up. Thanks everyone so much for your time.
Yeah, thanks so much, guys. Great group of people. Congratulations to everyone at Simpler for finding John Carter. We look forward to seeing you on Trade Machine. Almost everyone joins and then has kind of John Carter at their side, me at their side, and Trade Machine at their side, and it turns out to be just a whoppingly powerful combination. So very happy to share this with you. Very happy to see you very shortly in Trade Machine. Thanks, guys.